your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to be quick here because we got some things happening in these markets that need to be taken care of pattern-wise. But there's the number there in the gold. The 618 was right there, missed it by $10. It made this number here at 50.90. It went to 51.11, and now it's dropped $80 into this level right here. Now, pay attention to this 382 that's coming in here because we're going to be watching it. There's a chance, and I mean it's a small chance, that this could be a pretty good buying opportunity in gold. Now, this is going to be a move down from roughly 51.20 down here. It's going to be a $300 drop into this, but folks, it's jumping around a lot, so pay attention. This might have been it right here, but I don't think so. I've got my limit minder set here where we go, but let's move over here to what it needs to be done here, and that is we just made a bottom here, I believe, in the NASDAQ. Let's get this up here. You'll see I had all these patterns lined up, and there's we are right now. The actual low was right there, folks, 28479. The low was 24783, so that's probably made the low for the day. There's a double ABCD pattern. There's the little one. That one's drawn wrong. That's not right. Doggone it. Shut the front door and raise the rent. Just move it here. That probably goes a little lower too, right? Yeah, that one goes down here to 26.45. But here's the bigger one. Is it 28.50? And we've made that because we went below that by just a little bit. So that has completed the larger pattern right here. The the S&P number is quite a bit lower. That comes in at hold on one second. We'll get it up here. That comes in right here at either 68, well, actually the bigger number, 68.43, and then you have the other number, 68.20, which is challenging that low right there. So that's what we're watching as we look at this. And now remember, the Dow Jones is still up on the day, folks. After being up 500 points, it's still up on the day. But the Dow Jones is only it's being manipulated by 5 stocks that are up really strong. You got Verizon, Cisco, Walmart, J.P. Morgan, and Chevron are all very strong, up 3% or more. And these are triple-digit stocks, so that makes them go a lot higher. And by golly, that's why you're seeing the Dow was up and then the rest of them down. Look at some of the other stocks. Apple's not in the Dow. It's up 7%. Let's take a look at Apple today. People are going to be asking me about it anyway. Let's see where we are. I see at one time we were up at 279. Now we're at 274. So it came back from that $7 area, but that's been a big stock today. So it's a stock it's a market of stocks, not a stock market, as Bernard Baruch used to say. Okay, those are the numbers that we're looking at. I've got the limit minders put in here because I have a nice position here that I'm just for what do you call it, educational purposes, as they say in the trade. Okay, now let's get over here and take a look at the Russell, because the Russell was really strong at one time. Oh, brother. I should win an award for that one. Okay, I have to show you something, folks. Here's where we are here. Get up here to 1C. There's the Russell today. Had to move up above the 786. Then look at the ABCs all the way down, folks. 1, 2, 3, 4, 5. Just keep going down. Now let's get over here and look at the one that's been running the market. Let's just get the old 3-minute chart up here. And we're going to come in here and take a look at this. This is the market for the stock market today, folks. Now, all we're going to do now is we're going to treat you to a little bit of magic, and we're going to change it to a 2-minute chart. And lo and behold, look what's happened. Look where we're coming into, folks. We're going to have a rally here. The last part of the day, this has been what's running the market. We've got a little 3 drive right here, right now. So watch this. This could be a big surprise. We've got those numbers, and the number on the S&P, the stop and P, let's get that up here because that's important. We need to be watching it too. Hold on here. Here it is right here. We're not very far away from that. We're about 20 points away, I think. No, wait. 30 points. That's not very much. It could get there easy, but let's put the limit minder in here. We'll make a new low here at 861, and then we'll head down to this number right here with 68.43. That's the large number of this big pattern from there to there to there. And then you have the other pattern that is right there. There's a 20-point handle difference. There's the old stops here from the 21st. So you can see that we're finally turning over to the downside. So that's why we're paying attention to these as they're moving along. Now, remember, folks, this is the one that counts. Okay, this is the NASDAQ. This is the New York Stock Exchange Index, and we've completed it. We've tested it and everything else. So the time has run out, and the market's turning over exactly like we thought it was going to have happen. It doesn't always work that way, but this time it's working that way. All the things that we've talked about are now starting to happen. There it is updated, okay? And so we matched that there 3 days in a row. That's that rising wedge pattern that we've showed you many, many times, okay? So get ready because we're going to see something bad, just like we're looking at in Bitcoin, folks. Oh, my God. He's got that. He's gone now. Anyway, there's such a nice fellow. A, B, C, D pattern right there. There's your 382. Folks, if you ever get Garley's book, on page 222, he took 2.5 pages to talk about this pattern, where you have an A, B, C, D in a new bear market. Because you have a bear market now because what? You have lower lows, right, than these past ones here. And so now you have the rally up here. And that's where you come up to right to this level, and we're heading down to 52,000 is the actual number of the D point. 52,200 and something is, as I recall. And folks, we're in a position now where after you look at some of these patterns, you're going to be looking at something that's going to be a little bit scary. So make sure that you using stops on all these positions, no matter what you're looking at. I'm watching 2 different things here because I have a little bit of cash money in this, and I share a micro account with 7 other people. So we got to watch what we're doing here. Here's where we are here with the gold. This might be the 382. The reason why, folks, take a look at this. Now, there was the big pattern to the downside. Okay, then you had the head and shoulders. There's your left shoulder. There's your head. There's your right shoulder. The right shoulder is higher than the left shoulder, so it's positive. That gave you a price of 590. This one took you to 5183, and it got to 51. Split the difference between the two. It had been 5111, and the high was 51113, and we were selling at 5093. Now I did. It doesn't make any difference what I did. Nobody pays attention to it. All right, let's get this out of the way. All right, let's talk about something because I don't follow these fundamentals, but take a look here, folks. Something that we've been relatively friendly to for a while, and that has been the crude oil. I didn't even see this until just before the air, but there it is right now. This has been acting bullish, folks. I showed it every single day on that hourly chart. It just wouldn't break down.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Here's the silver market over the last few days. You can see the measurement went to 91.28. The high was 92.01. And now you can see we've broken from 92 down to 84. So we're having monster swings. This is a very, very significant move here, folks, because if you look at this on the long-term picture, you'll see that it was exactly at the 382. There's the 382 on the whole move down. There it is right there. And now it's starting to come down. That's a sign that this could be a real look at this move, folks. $48 down. All right, $48 down. $17 higher. And now we're down another $8 from there. Now what we need to watch, because you never know, but these markets are crazy as heck. You want to follow the next 382. Let's see if we've made it yet today. And we did. We've been here for 3 hours. As long as we don't go below that, right, where it's trading right now, 84.20, it's got a chance. We get below that, then woohoo, look out. Could be really, really nasty. So, well, it's nasty if you're long, but if you're short, it actually is working out pretty good. All right, let's get back here to the old stop and P to see where our price targets are here. We're getting closer as we come down. The low has been 61, so we're going to take that out with any trouble. We'll be looking here. The first one here would be the big one to look at, which would be 68.42. But boys and girls, let's take a quick look at something here. Let's do something that should be done. I don't get a chance to do. Well, I have a chance. I don't always take it. Get over here. Here's where we are. But I want to get out of this, and I want to get over here to the trading view. That one is right there. Nope, this is it right here. Okay, there's the trading view. Okay, now we're looking at this on the weekly basis. You remember that wedge that we've got here now? We've been up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This was the down week 11. 11 out of 13 have been up. And this is where we are now. We've had no correction. I mean, literally no correction. So here's where we are coming into that. You remember when I did all this work, it was done on the monthly going back 10 years. And we're looking at so many of these patterns that are lined up A, B, C, D, A, B, C, D, A, B, C, D. Even these little ones are in here. So this is why we're watching it very, very closely. And so I'm expecting something nasty to happen at any time. Today isn't nasty, but nasty's a coming. That's all I can say. So we'll be watching. Wow, the Dow just dropped 110 points. That I've got to get back to looking at what the prices are doing, folks, because I got some serious cash money here. I've got it. Like I say, I've got a micro account of the E-mini, and I split with 7 other guys. So there's 8 of us in this one. So we'll see how it comes up here. There's the E-mini right here. All right, that's silver. Get that out of the way. There's the S&P right there, 88.20. The Dow Jones, let's see, it's coming down pretty hard now. All righty, yeah, there we are. Yeah, so look, there's our bottom coming in here right now, folks. And look, if it's worked this way, and we got 2 hours to go, and the world is not coming to an end. There's going to be up days, but look at this. We're coming down. This is lined up perfectly. You're going to have to take a look at this. So what we're going to do is we're going to look at this hourly, because this has been the one that's moving the market. When it shook the tree, then you'll see what happens. So look how high we are compared to all the others. See, this has been bullish. We didn't quite take that out, but that's what it's been doing. Okay, so let's see what we already threw the 618. I can tell you that right now. We're right there right now. We might get down here. It's only another 150 points, but we've got time working on our side. And as we know, this doesn't work all the time, but since it's so perfect, see how the little highs or everything are just like this? That means this is a really good chance, but that's at the end of the show. So that's what we're going to find out. Because if you're making new lows after 1:30 or it be 2:30 New York time, 2:30 with an hour and a half to go, then look out. It's going to come down pretty hard, and it's going to set up some bearish signals on folks, and they're going to say, well, I better get out. And then they're going to say, sell, and you remember the words from Trading Places when what is Mortimer Duke says to him, to who? Who do we sell to? To who? In other words, nobody wanted to buy it, and therein lies the rough. Okay, let's get over here. We watch this NASDAQ real closely because that's been running the show, and it's already made the big pattern right there, 2850, okay? So the only other one is out here is right there. So it's within 80 points where it's supposed to be. That's why you see that limit minder right there. When we get to there, I want to be able to pull the trigger because I think we're going to rally the last 2 hours of the day. And I could be wrong because, there's the pattern right here. See, eventually, folks, we're going to take this out and you'll know what's going to happen then, right? So we've been watching it. But folks, this is really a no-brainer if you just step back and see what's happened over the last 3 days. Monday, Tuesday, and Wednesday. Sure, the Dow was up first 2 days. It was started up today too. But the AI stocks, take a look at them. Look at all of them. If there was ever a scam put on you, just like the zero interest rates in bonds, look at Microsoft. Let's just do it. I mean, watch what things are doing. Microsoft had an incredibly bullish pattern today at 411. Let's see if it held up. I mean, it had all kinds of things to make it to be a buyer of it. 411. It's held. Look at that. With the market even being down, it held. There was a number right there. There's your number right there. The low was supposed to be 409.90, and the low was 408.56, and it's already higher. So there's another sign that it's not going to fall apart today because it's still up. There's a perfect ABCD. We've been watching it. This is the guy that put, $500 million into AI? Okay, let's look at the big daddy rabbit, NVIDIA. Right here, this one, I dare anybody to buy this stock. I mean, this is a joke. They're trying to wiggle their way out of it. Now, well, there's a lot of things we got to get done. This is a long-term thing. Don't worry about here. Don't worry about the intraday fluctuations. You mean the one from 209 down to 170? Sounds like a Bitcoin person, right? Anyway, let's pay attention to some of these things. But that is an ABCD right there, and made yourself $4. All right, and just go through all of them. Do it yourself, like the advanced micro devices today. It's getting massacred. And it was already on its way down. AMD, where is it? Up a little higher. Hold on a second. AMD is right there. And it got hammered pretty bad today. Look at that. Does that look bullish? No. Doesn't look bullish. We already know what Oracle looks like. That looks like a dying whale. And they're going to be offering bonds. I guess they can't borrow enough money, so they're going to start selling bonds. Where is the Oracle? Oh, it's right here. Yeah, all of them are that way. Even the biggest. Oh my God, this thing's more than half price from where it was $100 billion. Let me tell you another one. Write this ticket coming out, folks. They're going to give you a really good opportunity to buy SpaceX and AI together at $1.2 trillion. I have not traded a stock since I traded Elastic Stop Nut in 1959. That was a couple of places I never made any money in it, but I will have my sell order that day. Whenever they bring that puppy out, I'm going to be just be careful what you ask for, Pesavento. You just might get it. Let's take a break. We got the man himself coming up next, Mr. Stan Harley, and I'll see you on the flip side tomorrow, folks. I'll still be with us.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
He's looking good and feeling good. It's Mr. Stan Harley. How are you doing, partner?
Mr. Pesavento, master trader,
you can call
handsome
me Larry.
hunk.
You can call me anything you like, except don't call me late for dinner.
Master
What's
trader,
the market
handsome
going to do
hunk.
next,
Boy,
buddy? Everybody's asking me, and I keep telling them, have no clue, have no clue. You had a low for the 4th of February. I saw your letter, and today is, checking my watch, the 4th of February.
Well, yes, that is absolutely the case. And let me start out. We're going to cover three things today, three markets. So we're going to talk about the stock market, we're going to talk about precious metals, and we're going to talk about Bitcoin.
Here you go. That'll cover it. Fire away.
Mixed market here, short term, long term. I'm going to try to cover all of it and convey what I think is likely to occur and what the uncertainties are. First of all, let's kind of step back for a minute and look at the larger picture. This is a weekly chart going back 11 years. And over on the far left, I have marked with a blue vertical line the high that occurred on May the 20th, 2015. That was what I call so-called 7-year cycle top. And since that day, we've seen some major highs, and they have, interestingly, aligned with all of the major Fibonacci ratios. I put those dates into a spreadsheet and push the button in the computer. And what it tells me is there's a time series function spanning about 559 weeks, about 128, 129 months. And if my assessment is correct, it's due to come to fruition right about now with a standard deviation of about 1.1 weeks. So that tells me there is the potential, not the certainty, the potential for a pending high in the stock market. Okay, let's set that aside for the moment. Let's look at a weekly indicator that I have employed for a while. This is an indicator that tracks what I call price velocity. Some people refer to as rate of change. Some people may refer to it as momentum. But essentially, I look at this week's price, and I look at the price 7 weeks ago, 14 weeks ago, and 27 weeks ago. And I plot them all on the same graph. Why do I do three? Well, there's a very good mathematical reason for that. And that is, for an indicator to be valid, it has to be based on the cycle underway at the time. And cycles, as we all know, expand and contract. They're not fixed beat oscillators. They may be for a short time, but then they tend to, over the long haul, tend to expand and contract, and sometimes just go poof, go away, disappear for an event or two, and then come back. So with all those uncertainties, how do you construct the perfect indicator? Well, the answer is you can't. However, the way around that is to look at a range-based or a price velocity-based indicator that looks at different points in time, and I plot them all on the same graph. So I look at three look-back time periods, and I plot them all on the same graph. And that's how I get around that problem of the variable cycle and the need for the perfect indicator. Well, take a look at all three look-back periods on the graph. 7 weeks, 14 weeks, 27 weeks. They are all heading south. And this is even as the market has moved higher. Mm-hmm. Indeed, the S&P topped out just a few days ago on January 28th. Now, this is very interesting. This indicator can go down as the market goes down, or it can go down as the market moves sideways. Which is it? Well, we have to look at other indicators, we have to look at other time periods, and we have to look for the interplay among the major indices. But right now, the indicator is heading south, and so let's take a look at some other time frames and some other indicators. Maybe we can get a clue here. Here is a monthly chart going back to 1998. And what I have marked here with purple vertical lines are what are the dominant monthly cycle lows. I call these the monthly primary cycle. We had a low in 1998, 2002, 2009, 2011, 2016, 2020, 22, and so on. And these monthly time counts between those lows are of three types, and three only. 30 months, 49 months, and about 80 months. And those three monthly cycles define the vast, vast majority of cycles on the monthly chart. Here's where it gets interesting, and I kind of let out a little bit of a sigh. I had previously believed that the low that we saw on April the 7th of last year might have marked the monthly primary cycle low, and that would have occurred about 30 months from the low that occurred back in October 2022. But now I'm not so sure. And here's the reason why. Look at this indicator. This is, like I showed with the weekly data a couple of slides ago, this is the same computation on the monthly chart. And notice the market has moved up substantially off the 2022 lows. We got a little bit of a dip at the 2025 low in April. We've moved up again, but take note of the structure in this indicator. Even as the market has moved higher, the market, I'm now talking about the S&P, look at the divergent structure that's developing. So to me, as a technician, that flashes caution. That says we could be putting in a monthly cycle high right in the present time frame, or it's a big fake out. Which is it going to be? Well, then I call up my good friend Larry Pesavento and I say, Larry, which is it? What's it going to be? And of course,
and I
he will tell
answered
us.
to him, I've been Barry since 1983, so let's continue. No, that's not true. Go ahead, Stan. He doesn't call me. He knows more than I do, folks. He's just trying to be kind to an old person, that's all. Now, this one I like. I can see this one. This is rolling over.
Well, the monthly and the weekly data certainly make the very compelling case for that. And if that's the case, if we are making a monthly cycle high here, and I go back to this chart, when is the next low likely to occur? And my answer is this. Take the October 2022 low on October the 13th, add 49 months to that low, and you get November 2026. Here we are, February. So,
Election day.
I hear the music. We'll pick up the rest on the other side.
We sure will. You stay with us. You're looking good today. Feeling good, Lewis. We'll be right back, folks. Hang in there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back with Stan Harley. Please continue, Stan. You've got us glued to our seats.
We've kind of seen a rolling top so far. On January 28th, just a few days ago, we saw the NASDAQ Composite and the S&P 500 make their then all-time highs. Yesterday, we saw the Dow Jones Industrials make its all-time high. And then this morning, shortly after the open, we saw the Dow Jones Transports and the New York Composite, the broadest measure of market activity, which you were talking about in your part of the show about a half an hour ago, it made an all-time high. So the bullish signs are there. What the question in my mind is, are we making a low right in here as we speak and going to press higher, or are we in a topping evolution? And I think both answers might be right. Here is a daily chart of the S&P 500 on the screen, going back a little bit over a year. And I've spoken to this with you on the air a number of times in the past. But the daily chart, what I call the trading cycles, the dominant lows on the daily chart, have been, interestingly, defined by the exact same numbers on the monthly chart. Recall in the monthly chart, we saw 3 cycles, 49 months, 30 months, 80 months. Well, look at the daily chart. We see exactly the same numbers. And why is that? Because it's mathematics. It's Fibonacci based. That's why. You can see we've seen 2 cycles on the daily chart going back the last year plus, 49 trading days and 30 trading days. And the inference right now is that the market might be making a low today, a short-term low, 49 trading days from the low that occurred back on November the 21st. The question then is, well, if we're making a high on the monthly and the weekly and we're making a low on the daily, how does that interplay work itself out? Tough to call that. I suspect we might just get a short-term bounce. And when I say short-term, I mean very short-term. Here is a possibility. Here is another cycle. This is the S&P 500. I ran this off just a little while ago before coming on the air. This goes back just a few months. And as you can see with purple vertical lines, the S&P 500 has been making important highs and lows. It's 17 trading day intervals, plus or minus 0. That's interesting. Now, that won't last forever, of course. But assuming the pattern continues, it points to Friday, February the 6th. So tough call here. I'm thinking that perhaps we do make a short-term low today. Maybe we bounce on it into Friday. Maybe the Dow, the New York Composite just go a few millimeters higher. And maybe that caps this thing off. Or maybe it extends into next week. Can't be certain. But I think the upside, my takeaway is this. I think the upside is limited, Larry. I think the odds favor, despite the mixed signals, I think the odds favor a topping in the monthly cycles and the weekly cycles right in this time frame, plus or minus, and then we get a pullback into November. That, of course, could change, but that's how it looks to my eye right now. And if anybody wants a clearer picture than that, they have to call my good friend Larry Pesavento up, and I'm confident he will have the answer.
I tried calling him. His line's busy. Don't call me. I don't know. I'm just taking a sophisticated guess. Stan, let's get to Bitcoin because I think that's the disaster waiting to happen.
If we have time, I thought I'd start with precious metals and then go to Bitcoin, or what would you like to do?
Bitcoin first. Let's do the metals because there are more metals people than there are Bitcoin. Let's do the metals. Try to.
I brought charts on both today. Let's look at the metals. And I know this is a focus of yours, and it's certainly a focus of mine. I found this, the Lucas number 47, which operates a lot in Bitcoin. It operates in the stock market. Well, look at the gold market. I did some research, and I found that the United States Congress, back in April of 1792, fixed the price of gold at $19.75. 141 years later, exactly, which is Lucas 47 times 3, Congress again fixed the price of gold at $20.67 in April of 1933, and the U.S. government began confiscating all gold holdings from private investors. 47 years exactly later, on January 21st, 1980, gold reached a high of $873. Just a few days ago, on January 29th, gold reached a price above $5,000, and that was 46 years, which is within 1 year of being Lucas 47 from the January 1980 high. Interesting. Do we have a 47-year cycle here? I absolutely think we do, yes.
And if anybody fades that, they ought to check their hole card because that's not a good thing to bet on.
Let's look at the charts of both silver and gold. Something that I track very closely as a technician, I find that important peaks in any market, whether you're talking stock market, metals market, Bitcoin market, etc., are generally defined by base powers of 10. So what do I mean? If an index or a certain commodity moves up to 10, 100, 1,000, 10,000, 100,000, that tends to be significant overhead resistance at major pivotal reversals. We tend to see a modicum amount of overthrow, but nevertheless, you'll see the market push through that level and then pull back below it. And then if I take that and I divide by a half, I divide by half, I divide by half down to the 1/8 level, oh my gosh, that does a dandy of a job of defining support and resistance. Take a look at the silver chart. It popped above 100 very briefly, and where is it now? $85. Let's look at the gold chart. What's half of 10,000? 5,000. Gold popped above 5,000, what, for a day? And right now, it's at just below 5,000 right now. And last but not least, look at the Fibonacci ratios on the gold chart down below. I marked the 2011 high with 000, 0.618, marked the high that we saw in 2020, 0.764, the low in late 2022, and that aligns with right now as we speak.
Yeah.
So you put exciting things together. You've got a 47-year cycle. You've got the Fibonacci relationships on the weekly chart, and you've got what I call the price octaves of 100 on the silver chart and 5,000 on the gold chart. You put all that together. I think we've made a major top in the metals, Larry. That's what I think.
Yeah. Me too. How about we got to pay a few bills here. Let's see what the time says here. Just stay with us. I'm going to give you another 3 minutes to cover the Bitcoin, if you could, Stan.
Absolutely.
Thank you. We'll be right back with Stan Harley, folks. Pick those cards.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Back, folks, with Stan Harley with Bitcoin. Please continue, Stan.
Brian, yes, sir, Larry. This first chart I have is a log chart of Bitcoin going back to the very first day of trading in July of 2010. And Bitcoin has a structure that is different from the stock market. Bitcoin tends to make spike tops and rounded bottoms, whereas the stock market tends to make spike bottoms and rounded tops. So from a cyclical perspective, we typically define cycles bottom to bottom, generally speaking, and that comes from our vision of the stock market. However, having said that, I think cycles in Bitcoin are much better defined by looking at the peak-to-peak structure, not the bottom to bottom. You can see where I've marked with purple vertical lines. Those are the major peaks going back to 2010, and several things stand out. First and foremost, the peaks are separated by Lucas numbers. One of them was, and these are months, by the way, the first two peaks were separated by 29 months. 29 is a Lucas number. And remember our good friend Lucas 47, which that was the yearly time count on the precious metals chart. Well, as you can see, 47 months defines the peaks on the Bitcoin chart. And the last three peaks were all separated by that 47-month cycle. 47 months is approximately 4 years. 48 months would be exactly 4 years. And that peak that we saw back in October the 6th was exactly 47 months from the November 2021 peak. The next thing that stands out is the bottoms tend to occur 1 to 1.5 years after the top is made. So if the top occurred in October of last year, I guess we're out of time.
Hey, thanks, buddy. We'll have you on again in a few weeks, and thanks for joining us. We'd really like to have you. Stan Harley, folks. Harley Stock Market Letter. Cannot miss.